Hey everybody, welcome back. Sive here with the forexpeacearmy.com. Let's take a look again on the euro currency. So in general, we could say that here in the euro, the situation is starting to become boring. So as you can see, in the weekend we talked about this, grabber under question because it has not been confirmed by the futures charts. But this time, with this reversal yesterday, we've got the one, and actually it exists also on the dollar index, on the futures. And as you understand, it suggests the taking out of the stop, which is totally contradicts the idea of the weekly grabber that we discussed previously, which suggests the deeper retracement. So currently we need to find out what we're going to do and what grabber seems more reliable and whether we could combine them somewhere. Speaking shortly, currently, guys, this pattern looks as deserving more trust from us rather than the weekly one. It's just because, based on the price performance. So you can see this thrust acceleration on the 4-hour time frame chart. Take a look what has happened. If we suggest starting with some big bearish pattern, market has completed just the minor COP extension, turns up and erased this ABCD pattern because market right now stands above the top. This ABCD pattern does not exist anymore. So here we have the bullish reversal swing, which is also not in favor of the potential bearish scenario. So that's why currently this level is off the table, so we're not considering any ABCD patterns for now. Finally, on the hourly chart, you could see that kind of the breakout has happened here, this thrust action out of the wedge pattern. On the cross-market analysis, it's a very similar performance. So take a look at the Great British Pound grabber that we mentioned last week. Here it's worked nice, so market jumped above the top, and on the weekly chart, this grabber also has been erased. It has been formed 2 weeks ago here. We talked about this briefly in our daily update. Now it has been erased. On 10-year bonds, it's a very interesting situation when the market is forming bullish, particular for bonds, this is bearish, but for the interest rates, this is bullish pattern, suggesting increasing of the rates. Market stands on a tight wedge consolidation, which means near the neckline, which means that it prepares for a possible upward direction. We have long-term view that yields could reach 5% on the 10-year bonds. Based on the quarterly chart of the 10-year bonds, we have the big grabber that has been formed last year and then still valid. With the new policy of the Fed and some surprises that could come on liquidity and inner finances inside the United States, everything is possible. Would not exclude anything. Bank of Japan also could add fuel to the fire. For example, if banking sector in Japan starts feeling bad. We also talked about this in details in one of our reports when we have shown that the Japanese banks have very low capital and minor changes in a balance sheet where, for example, the government bond stands with the rising of the yields, unrealized loss could increase, which is make impact on the capital and so on. So, and it might be cascade collapse starting from the Japanese banking sector. It's anything is possible. But speaking about the short-term perspective, here is consolidation suggesting that probably yield could keep going higher. With this background, it is surprising to see that the dollar index follows the same tendency, it's dropping. So with the same grabber that we have on the euro currency. In the short term, it means that actually they should move together. So rising of the yield suggests support to the dollar. But that might be the sign of devaluation. So when the investors demanding higher yield, at the same time they are not buying the dollar, it's not supportive for the dollar. So this is negative moment. From that standpoint of view, it seems that at least in the short term, this grabber on the daily chart, it's quite reliable. So we could consider it. Besides, we but to get just a bit more safety, we could combine some strong technical support with the potential position taken with this pattern. For instance, if we take a look on an area around 1750, 1755, we have confluence, we have previous tops here. It's been broken, now it will be support. If even we suggest that bearish pattern will start working for some reason later, buying here will be relatively safe because level is rather strong. At the first touch, we probably should get at least minor bounce. Once this will happen, we could move stops to the break-even and see what will happen next. If we will be right, that's great. We have the position, market keep going high, taking out at the top. If we are wrong, we're out at the break-even, something like this. But to speak about the actually weekly chart, market has to start forming something bearish to confirm that it indeed intends to reverse. Currently, I do not see anything of that kind. Maybe if we will start getting kind of the hand shoulders here, something like this. So it will be neckline, for example, shoulder, head, starting forming some reversal. We could return back to the idea of the taking short position when we see the signs that's becoming bearish and actually could become the background starting point for a weekly pattern. But for now, we do not have it. Besides, the last thing that I hasn't mentioned is that actually market with this upward action has broken through the 618 resistance of this downside swing. So it was somewhere around this level, and already has been broken. So this is not also typical performance for the bearish market, which just showing the retracement and preparing for a downward action. It's too strong and actually too many bearish factors, bearish signs have been destroyed with this potential upward action. So that and towards what we have currently, despite that we have weekly grabber, we do not have the corresponding background on the intraday charts, so we can't take the short position right now. Speaking about long position, well, it's okay. Seems the performance looks good, but we prefer to get some more insurance and try and take the position at the good support, just to minimize potential risk, because contradictory patterns still bring and hold some risk for the bullish position as well. So that's our trading plan for today, tomorrow. Let's see what will happen.